Everyone, so we're going to look at the SPY real quick and we're going to do some charting. Basically, what you're looking at here, I've charted all the gaps out. I'm going to give my insights onto what I expect moving forward. So clearly, we're at a point in time where it's going to be pivotal for the bullish or bearish sentiment on the long run. The industry knows this. Most traders know this. If the market continues to run tomorrow, then it will likely be more bullish conversion. Now, we have a few important events coming up as far as economic activity, which is important. We have the CPI numbers that are going to be released for September. That's going to be on the 13th. And then we have the Fed minutes to the FOMC, I believe the day before. Let me check real quick. Okay, so 10:12 is the Fed minutes meeting. It's at 2 p.m. Eastern. It's going to be the FOMC minutes meeting of the 21st of September, and then we're going to have the inflation numbers come out for September. Now, what I anticipate is that we will likely continue to run up until the CPI numbers come out. And the reason being is because they're likely not going to be good, because they're measuring for last September and we had record high repo. So what I'm thinking is that based on the gaps, based on the RSI, and based on the economic data and the time left remaining on the year, it's looking to me like we may run up to the CPI, and then that will be our reset narrative. We can play that reset, and then I would imagine pump up, close up these higher up gaps at 401, 405, 406, heading up to the FOMC meeting for October. So just keep that in mind. In the FOMC meeting for October, I believe is the 21st, if I'm not mistaken. Let me look that up. It's going to be, oh, there is none this month. That's right. Oh, ooh, there isn't. Okay, okay. Okay, so what's the only other month this year we didn't have an FOMC meeting? That's right, it was August, wasn't it? That's all I needed to see. Okay, so yeah, again, we're literally sitting here where we were in July. This is the daily chart. We ran from July 14th all the way up to August 16th, and then we trailed off ever since with a few resets here and there for the upside. So given the timeline, we're trading basically where we were today at the start of the run in July. And the RSI, where was the RSI at during that time? The RSI was a little bit lower, not much. Actually, holy shit, hold on. Yeah, just a little bit. The RSI was at 41 for this candle here that the crosshairs are on. No, this one was at 48. But this one here was at 42.96, and we're currently at 45.46. So we're slightly higher than we were last time, and we are also trading slightly higher. Because here we closed up the day at 376.36. Here we closed up the day at 377.09. So everything checks out there. RSI is literally just slightly above fair value, and I would imagine the oversold mark is going to be this first gap here, this big one on the daily, the 401 to 406. That's when the daily should be nearing the overbought marker, and then we'll have to see what happens from there, but I think we should see continued upside. No FOMC this month. But we do have inflation. I think inflation will be the reset. Because let's see here. The reset here and the run in July to August. We just had 1 day here, 3 days here. That's when Yishay got, started buying in. And then we have just a few stragglers in between right there. Okay, so this should be it, man. I mean, the research has been done. You can sit on social media and believe what you hear all day, but you're not gonna ever learn anything. If you want to make money, this is the time to do it. But yeah, upside, nothing's changed. Looks like the exact same setup as mid-July, with no FOMC in August. The only difference is we have the FOMC, I believe, early in November. It's going to be earlier. Yeah, November 1st and the 2nd. All right. Well, there it is. Expect more upside. Play the reset. Play the downside like today. Let's look at the 3-minute psychology today. Easy trading day. You buy the dip here because if you would have charted the graph or the gap from back here, it literally touched the gap's resistance or support rather perfectly. That's where you bought. You had a great freaking day. And then guess what? It bounced right off gap resistance up here to the upside and then boom, trailed off right here. Chart the gaps. It will help you.